Hello and welcome everyone. This past week was quite eventful. One big announcement that came out was the distribution cut for BIGY ETF. If you have seen my previous videos, you know that BIGY is the top position in my portfolio along with HHIS. So this distribution cut was definitely something that impacted the portfolio. However, I'm not selling BIGY. In fact, last week I doubled down and bought more units of BIGY as well as HHIS and ST. I also received income of $99.62 from the ETFs that pay semi-monthly. We will go over that shortly, but first here is my plan for the BIGY ETF. As mentioned earlier, my plan is to hold on to the BIGY ETF, and last week I also bought more units to lower my overall cost basis. Previously, I held 172 units at an average of $18.24. Last week, I bought another 96 units for an average of $15.70. And this brings my current total to 268 units for an average cost of $17.33. In this portfolio, BIGY serves the purpose of boosting the overall portfolio yield. Even with the distribution cut, the expected yield percentage for BIGY is one of the highest for any ETF in Canada. Based on its current price of $15.95 and a distribution rate of 40 cents per month, it is yielding 30.09%. Even for my average cost of $17.33, the yield would be approximately 28%. The only other ETF that has similar levels of yield is HHIS. Reallocating the funds invested in BIGY to HHIS would result in too much concentration in a single ETF, in my opinion. Hence, for the purpose of boosting the income, BIGY is the best choice even after the distribution cut. However, this is not the only reason I'm holding on to this ETF. I also believe BIGY is a better ETF now. This is something I had highlighted in my previous video, but I wish to reiterate it again. BIGY has added defensive sector stocks, which account for about 20% of the total portfolio. This makes the overall portfolio much more stable. These stocks will balance out any impact on the portfolio resulting from a negative performance from tech and crypto-based stocks, which comprise the remaining 80%. Previously, when the portfolio was fully concentrated in tech and crypto companies, it received the full brunt of their negative impact. In my review of the BIGY ETF when it was newly launched, I had highlighted one very important thing, that BIGY was focused on volatility maximization while HHIS focused on sector diversification. The update in BIGY's holdings recently signify a major change in BIGY's strategy. Like HHIS, it is now focused on sector diversification. Hence, right now BIGY is safer than its previous version. The yield is also quite reasonable and somewhat similar to HHIS. More importantly, the tech and crypto sectors have already been down over the past year, and the probability of them going down further is quite low, which means that the probability of BIGY's capital decline is also quite low, and consequently, the probability of another distribution cut is also low. Hence, I am doubling down on BIGY and continue with my original aim of making BIGY, HHIS, C-Day, S-Day, and Q-Day my core holdings in this portfolio. Speaking of core holdings, I did buy more units of HHIS and S-Day as well this past week. Here are the details of those purchases. In total, I added capital of $3,000, while the total value of the purchases is $5,258.86, which gives us a margin multiple of 1.75x. This was slightly aggressive, but the overall margin multiple for the portfolio is still 1.5x. So, as far as the overall portfolio goes, I'm still within the range I'm aiming for. And this is how the portfolio looks after all these changes. We can see the capital invested is now up to $17,000. The total return of the portfolio is 3.51%. The total income paid out is inching closer to $1,000. And in terms of capital gain loss, we are more or less the same where we were last week. Last but not the least, take a look at the expected yield on capital. It is at 38%, down about 2% from where we were last week. This takes into account the recent distribution cut from BIGY as well as the purchases I made last week. So despite a 36% distribution cut in the second biggest holding in the portfolio, we have only lost about 2% of the overall portfolio's expected yield. When I started this portfolio, I was aiming for an overall yield of 40% or higher, but I'm quite happy with where we are right now. The fact that it is possible to maintain a yield percentage of 35 to 40% even after a massive distribution cut in my top holding is quite encouraging. For next month, my plan is to invest another $3,000 and I will most likely buy Q Day and C Day. They are already in my top 5 holdings, but I would like to get them at the same level as S Day. With that, we come to the end of this video. Let me know if you hold BIGY and if you are making any changes due to the recent distribution cut. Thanks for watching. Don't forget to like, share, and subscribe if you found some value in this video. I will see you all in the next one.